Okay, there we go. Exactly 4 o'clock. Right. I'll get started. Thank you for coming, everybody, on early in the morning or late in the afternoon, depending on where you are. I'm currently in England, so it's 4 p.m. And I recognize there may be another English or a person here or two. So that's cool. So it's been a while since I had a webinar on a Saturday or any day, that is. And mainly because I've been in a development phase, and that when I get stuck into development, it seems to take all the time. So I've come out of that now and getting started back with the webinars. This is going to be a regular thing now for the rest of the year. So hopefully you can all attend for the coming ones too. And this really got started, or I got inspired again from last weekend at the Orange County Trading Workshop hosted by Greg Mills, who's with us today here. And that was in Orange County. It was the whole weekend. I did a presentation there and listened to a lot of other presentations. So that really got me sort of excited again about presenting and showing some EdgeRater things. And I realized from that presentation that there's a lot that we currently have in EdgeRater that I really don't talk about that much and that really needs to be talked about. So yeah, so if you weren't there last weekend, there's a lot of people that online here that weren't there last weekend. So I might cover a couple of slides that I covered last weekend. There is a disclaimer, so I will talk about some individual stocks as we go through. And of course, this is just for educational purposes, and I'm not recommending that you go out and purchase or sell any stocks. So just get that out of the way. And as a brief introduction for people who are new here to EdgeRater and don't really know me, I'm a software developer. I worked at Microsoft for over 5 years. And then in 2007, I left there because I had a great idea for an analysis program for stocks. And that is now called EdgeRater Pro 2024. And it was updated at the beginning of this year to be all new, built on a new foundation of .NET capabilities. And that program has a lot of capabilities for backtesting and charting. And a new thing, relatively new in the last few years, is that it has some options information too. And that is something that's a little hidden in the program or underused, I think, because I really haven't been talking about it that much. So we'll cover some of that in this webinar as well. So 10 years ago was my first time presenting at the Orange County Trading Workshop. I remember that. And I remember one of the first things that I showed there was a system that EdgeRater could show you how it performed based on the percent gains trading, essentially looking at a list of stocks and saying which ones have the highest percentage gain and trading those, taking a selection of those, maybe 10 at a time. And I always used to show that for the first few years there, and I hadn't for a long time. And so I went ahead and reran that test for the last 10 years to see what happened. So this is one of my original slides from that event, and it really was the premise was what would happen if every day I purchased the day's 10 biggest gainers and sold them the next day. So one of the reasons that I produced EdgeRater was that I had this question and I couldn't find a way to answer that question. And you need to be able to, in order to know the 10%, the 10 biggest gainers, you need to be able to compare one stock against another. And I also wanted to kind of review those stocks to see the charts and what they looked like and what happened after. So you can run this test for yourself in EdgeRater right now. Here is a quick slide which will show you, it just shows you the setup I used. It's Russell 2000 stocks. I've got 10 years of history in there. I chose my security selector to be always true, which means every day it's going to give me a a one value, which means that it's going to have an event for every stock for every day. So every stock gets chosen every single day. But then the trick here is this rank selector, which picks out of all those stocks the top 10 gainers. So that's using the top N rank selector and taking 10. And when you run that on the entries tab, you'll see every single day, you'll see 10 stocks. These are the top 10 percentage gainers every day. So give that a try. In EdgeRater, it's quite easy to set up. And once you've run that, you then run it into the trade simulation module, and you'll get some results. So I've got three separate results to show. One is when the signal occurs, so it's in the top 10, buy that stock at the close of that day, of that bar, and sell it at the close of the following bar. And this is the chart that is produced by doing that. You can see that from 2014 through to 2020, it was nothing really was going on with this. It was very up and down. And then since 2020, this has been we'll call it a strategy that has done quite well for a total of 574,000. These figures are just for comparison's sake. I think what did I use? So I think maybe I used $10,000 per trade, something like that. So that's $100,000 traded every day. So over 10 years. So then the next case would be buy at the open of the following day and sell it at the close of that same day. So essentially only holding intraday. It's an intraday trade. And so that has had a very bad start all the way through 2020. And then something happened in January of 2022 where this strategy started to do reasonably well. But overall, over the 10 years, it's down $254,000. So then the last case would be what happens if you buy at the close of the day that it is in the 10 and sell it at the open of the following day. So you're not holding during any trading, any market day. You're basically just holding overnight and selling in the following open. And this is the graph that appears for that, with an $875,000 gain in that strategy, which is mainly an up-sloping strategy. So it's very interesting and worth considering what is going on here. And in order to find out what's going on, you just run this, produce yourself a trade list, look at the trades, and just see that the validity of this testing. But it's quite a marked difference from that graph to the other graphs, and something that I still find interesting today. So yeah, so I thought I would just cover that. It's an interesting little strategy. Now, over the time of EdgeRater, which has been since 2007 was when I started developing it, and then 2009 was when the first release was available. And we started off as a backtesting program. Then the idea of templates came in, and templates encapsulate ideas. So rather than having to write scripts and do backtesting, there's lots of strategies written out there, lots of formulas that you can employ. And so the idea of templates came about. And now in the system, there's over 120 templates that encapsulate trading systems and methods and formulas from the experts. So this year, and the reason that I've been sort of had my head down and have not really been doing any webinars is that there's been a lot going on with development. And what's been going on is that there's a whole new version of EdgeRater. It's called EdgeRater Pro 2024. So if you are still running 2020, I don't think there are many people who are, but I do run across one or two now and again. Don't use EdgeRater Pro 2020 anymore. It's you'll have some issues if you still do use it, because the data that it's accessing is going to be slightly different to what it expects. So yeah, so everyone should be on 24. And 24, it's if you have the lifetime license for EdgeRater, it's a free upgrade. If you are just a monthly subscriber or a yearly subscriber, then you also you get the upgrade too. So this is really the only version that's in effect now, and it is 2 times faster in terms of scanning, which is quite incredible considering EdgeRater was already quite fast for scanning. And other new things that have appeared since the start of this year, along with the 24, has been a redeveloped chart script designer. So the way that you write scripts, if you're into that sort of thing, has changed, and it's a lot more efficient now. Everything's on one screen. I'm not going to show any examples of it right now, but take a look, check that side of it out. You might quite like it. There is an improved earnings moves template. So I won't talk too much about that. There's some expanded options data points. So previously with options, we had I had a list. I generated a list of 150 liquid stocks that had liquid options essentially, and then provided the data for those 150. And then this year, that has now expanded to well, first of all, 250 in the liquid options. That list is now 250 stocks, and it's the most liquid. Before, the way of calculating it was a little different, and now it's actually using the volume of the options in the stocks. So that list you'll see in EdgeRater, ER liquid options, is a really great list for trading. And also, in addition to that 250, there's also all of the CBOE weeklies are in there too. So the total number of stocks that have options data associated with them in the program is now 600 or so. And that's a lot of data to download to the client machines every day, but there's a much more efficient way of doing it now, and that's how that could be done. There's I've been working a lot with Ken Long and the guys from Ableway Tech, Phil and Griff, and they've been doing a lot of back testing with the new Ken Long templates. And so I've been following what they've been doing, and there's been a collaboration there that's resulted in some greatly improved back testing templates. So there's a really new batch run template and a multi-factor analysis template. So yeah, so that's been a good collaboration. And talking about Ableway Tech, there is going to be, so Ableway and Ken Long are associated, and Ableway Tech are going to be running a course July 20th and 28th of this year, so it's next month. And you can read about it at the link that I provided here, and you can read about it here. But it's basically going to be over 2 weekends, and so 2 one-day sessions essentially. And they're going to talk about the Ken Long swing systems, really go into them in depth and analyze them, and talk about back testing and how you can implement them yourself, and how you can use those templates that are new in EdgeRater and actually incorporate that into a real trading strategy, and how you can run that on a daily basis. So that will be well worth going to. So that's next month, 20th and 28th. You can find out more information on the link here, and we will definitely be talking more about that in the future. And hopefully Ken will be coming along in the next few weeks to talk about the templates and the systems as well. So that's to watch out for. All right, so market review, a quick market review. Everything now I think is going to be in EdgeRater. I'm going to be using the program live. Last weekend I didn't get too much of a chance to do that. It was mostly slides. But my favorite thing to do is actually to play with the program and show how it can be used. So I want to do that, analyze the market, look at some stocks, and just see what's going on basically. So let's jump into that. I'll take a few questions. There's a couple of questions came up here. So first question was from Dan. Can you use EdgeRater at the close of a day to get the list of the top 10 for that same day? Yes, you can. So yeah, and that's an interesting point, right? Because if you're going to trade at the close of the day, you need to have data for the close of the day, which means that you can't be waiting until after the market's closed for the data to be downloaded. So there's a way of doing that, but it relies on having Thinkorswim desktop application. And Thinkorswim provides there's a link to Thinkorswim essentially, so that if you run the you can download from Thinkorswim the very last say 5 minutes before the market closes. You can hit intraday update. You can get the last bar of data essentially, and that will then be your daily bar. We can make a daily bar from that, so you can do that, but you'd have to have that Thinkorswim program. And then is EdgeRater Pro 2024 available for the Mac? There's not a specific Mac implementation of EdgeRater, but people do run it on a Mac because you can run it under virtualization software like Parallels or VMware. So there are people who use it on a Mac, but it is not specifically written for a Mac. Okay. Let's see, where's my slide deck gone? It's here, but we're going to do this market review. Oh, before we get into the market review, there's one thing I do want to say, and that is, and I mentioned this last weekend, this will become important as we look at the new data, is that this is as of last weekend. I talked a bit about the Hindenburg omen, whose claim to fame is that there has never been a market correction without Hindenburg omen appearing. However, Hindenburg omens can appear without a market correction. So what I did was, for my presentation last weekend, was I went through and I just looked at all of the Hindenburg omens that have appeared in the market for the last few years. And I so on this chart, you can see them. Just prior to last weekend, there was a single, we call it a Hindenburg omen. There was a single one appeared, right, 3 bars before Friday. And then going back on the chart, the next one to appear was in the middle of this run up, a single Hindi on its own. But then going back, there were 3 Hindis appeared over here. Market sold off. So Hindenburg omens are more, you should pay attention to them more if you get groups of them. They're not necessarily one day after the next, but within a span of a couple of weeks, you might get 4 or 5 or 3. That's when you should pay attention. But singles on their own are not that important. So then I went back a bit further and just marked out the cases where the Hindenburg omens appeared. And going from the start of this chart over here, which was just before the COVID sell-off, there were 2 that appeared just before COVID. None appeared on the way out of COVID. And then when we got to the top of the market over here, there were 3 appeared. There were 2 appeared up here, and 3 appeared here. So this was a bad time for the market, as we know. There were 2 that appeared here. Nothing bad happened at that point, but just note there were 2, and then there were 3 appeared here before this sell-off here. And these last 3 cases are ones you saw in the chart before, the 3, the 1, and the 1. So I'll run the Hindenburg omen template, and we'll take a look at what has happened this week. Yeah, thanks for attending. That's my last slide. So we will get going with the program. So I'll close down my PowerPoint. All right, good. So hopefully my screen is showing, and I'm just going to move this over here. So many things going on. Right, so the first thing that we should do then is run the Hindenburg omen. And this is something that back in the day when I first started attending the workshops at High Growth Stock Investor, the Hindenburg omen is something that Ian and Ron used to talk about a lot. So you'll find that in the category of HGSI, this is the High Growth Stock Investor group, and there's the Hindenburg omen report. And we normally run this, we run it on the Hindenburg list. And that list has also been updated, is the list of stocks that are in the NYSE. But not all of the stocks, because there's a lot of warrants and other types of things in there that really pollute that list. But originally, when the Hindenburg indicator was devised, there weren't all of those extra things in the list. So now we use the list of NYSE, but only common stocks. And I added SPY in there as well for comparison, because one of the aspects of it is to compare it to the overall market. So, so Mike, yeah, I hope that answered that question. NYSE, basically, special list in EdgeRater called Hindenburg, which I have updated. So let's run that. Of course, that shows you can run it on any list. Yes, absolutely. And I think Jeff Scott runs it on as you say, the NASDAQ as well. Okay, so if there is a Hindenburg, if a Hindenburg appears, we will see Hindi in this column over in the very first column over on the left. So over here we'll see Hindi. Let's just make sure we know what we're talking about. Yeah, so yes, this column here, I'll expand that up. If you can see that a bit better. Yeah, so there'll be Hindi in there. So basically there are criteria that need to occur, and 4 of the criteria need to be true. So sometimes this lists how many of the criteria are true. Currently 4 are true in the last 2 trading days. So let's look at SPY on here. And here we are. There's SPY, the bar that we're actually pointing to here with this Hindi. So there was one here on the very last bar and one on the prior bar. And the one that I had highlighted prior to last weekend's workshop was the one here. So now there's been an extra 2. So yeah, that's important to, I think, just be aware of. Good. So we've took a look at the Hindenburg omen. The next thing is the percent B migration report, or this is a new take, a new version of the percent B buckets report. It's just a bit more extensive than that old report. And so if I come up to, you'll find that, by the way, in the Pro Tools category, but I think I have it in my favorites list, percent B migration. We run this one on the S&P 1500 list. So that is in EdgeRater 2. So let's take a look at that. This is a market breadth tool. And it takes all of those lists, all of those stocks, so 1500 stocks, and compares, looks at where every one of those is in relation to the Bollinger Bands. That's what really percent B means. It's the location in the Bollinger Bands. So if percent B is a 1 value, it means that the stock is trading at the upper Bollinger Band. If it's a 0, it's trading at the lower Bollinger Band. So anything less than 0 means it's below the lower band. Anything higher than 1 means it's above the upper band. So it figures out, so we have 10 different places in between. So it's sort of graduated in between, and we figure out where each of those stocks lies in their Bollinger Bands. And we come up with this profile here. Currently, we're sitting at 75% of stocks are below their lower Bollinger Band and 25% are above their lower. Okay, that's not 75% of the stocks are below their mid Bollinger Band and 25% are above the mid band. The actual graph here shows more information. So the graph I'm pointing to over here, right? That's got more information about the actual the actual percent B bucket levels. So we can see that if I look at, maybe I'll click on percent rather than count. So I can see 12% of the stocks in the S&P 1500 are below their lower Bollinger Band. So that's how the profile looks of those stocks. Okay. So that's not great. And what you can do with this report is you can select. So for symbols, maybe I'll select SPY, because that is the general sort of proxy for the market. And what I can do here is I can click on any of the points on the right hand side, and it will tell me what the buckets were for that at that point in time. So if I go down to this very low point in SPY down here and click, I can see the profile looked very similar, actually. But the market came out of that. So it's not necessarily a bad thing that you have 70, you have a lot below the mid band, that maybe there's only one way for them to go at that point. But so what I thought would be a good test here. So we'll take a look maybe down here at this level down here. Well, we don't have those numbers because I only ran it for a certain period of time. So what I thought would be a good test would be to see where were the points in the chart where we had a similar number of stocks below the mid Bollinger Band. So there is a way to see that. What I did was I saved my let's see, Saturday webinar. That was a good folder to put things in. However, I didn't put it in there. So yeah, so I think that's going to be in, let's see, reports. And I put that in percent B buckets because that's just what I did. Okay, so here is a way that I can see exactly where those cases were. Okay, I've essentially taken this percent B migration report, and the data that's included in this report, there is a worksheet within that report which shows me all of these numbers. So I've just actually created a separate worksheet so I can have the two side by side, and I've filtered to where the cases where the SPY was below, sorry, where the level was 70% or more below the mid Bollinger Band. Okay, and now as I run through, we can see on the chart, you can see where it says observing, that's the date that occurred. And we can see this is not updating, so don't pay attention to that. Just pay attention to the chart, to the chart itself. Okay, I won't close that. Okay, so these are the cases where it's pointing where the number of stocks below their mid band was greater than 70%. So you can see as I'm going through, I'm scrolling through all of those cases. There are some where it happens to be the bottom of that's as far as it goes down. There is a little blip in price, and then price continues higher from there. But there are cases also where it gets entrenched into that more than 70% below the mid band, and you see many of those in a row. So I'll just go through. There aren't that many. So here's a case where you end up in that situation, and then it kind of continues for a little bit. Like here, many of those cases in a row. As we come into this period down here in 2022, we're coming down into this kind of volatile time. You can see that was occurring quite a lot, as you would expect. As the market's selling off, you would expect a lot of stocks to be below their mid band. But yeah, we can just see them all. Scroll through quite quickly, and let's come out of that. And you also get cases like that on the way up. So it's not always something to be concerned about. Okay, so as I'm going through here, there's a sell-off there, sell-off there. And then as we come out through this, you get occasional blips where you get below that in that level, and then here, and then here and here. But this is a very interesting case now because we've got this is occurring where where SPY is actually going higher. So before it was always, you could always see there was a dip in SPY and you had 70% below the mid band, but now you can see SPY is actually going higher and you've got 75% below the mid Bollinger Band. So there's something just strange about the market at the moment, I think. That's all I'm going to say about that. But what I will say is uh, there's a template in EdgeRater to do with correlation. So one thing that's surprising, I think, in the market at the moment is a stock called NVIDIA. Okay, NVIDIA has just been on a tear. The market cap of the company is now, isn't it like the highest market cap around? So this has been increasing, but most of the stocks, as we see, are below their mid band. So this is a good stock. So my thought then was, what about other stocks that are similar to NVIDIA? Is there a way to find those easily? Well, there's the correlation matrix in EdgeRater, and correlation matrix basically gives you the correlation between one stock. It's a matrix essentially. So if you run this template, it's called correlation matrix, on a list of say 10 stocks, it would compare every stock against every other stock and give you the actual number representing the correlation, how much it correlates over n bars to how much each one of those correlates to every other one. So if you ran it on a big list, I've run this on a list of probably it's the S&P 500, just to see what is similar to in the S&P 500 to NVIDIA. So what I can do here is just scroll down or use my Control F to find NVIDIA, and I can see it here. If I click on one time in the symbol column, it's now going to order the stocks in order of correlation. How much did they correlate? I ran this template with a correlation value of 66, meaning over the past 3 months. 66 bars, I think, is approximately 3 months of trading. What stocks correlate to NVIDIA. So it's ordered them in that way. What I can then do is click on NVIDIA there, and it will just put everything into the top quadrant of this report that is correlated with NVIDIA. So that's the way I like to view this. And then I can see that NetApp is highly correlated. And this chart that you're looking at actually has NetApp as the chart you're seeing, but the chart behind the gray line is NVIDIA. All right, and that's just pure NVIDIA. And then below, there's the actual correlation number over a 66 bar correlation, essentially, and it's showing that it's just highly correlated at the moment. So that's interesting, right? This is the group of stocks that are following NVIDIA. So I don't know if you're all aware of these, but you've got Eli Lilly, TJX, VRTX, Hewlett Packard. The surprising one to me when I saw this is Walmart, and look at just how closely Walmart is since this period down here, which was basically the end of last year. Walmart and NVIDIA have just been almost identical in their path, which is extraordinary, I think. Anyway, that's a great tool. It allows you, once you've produced this report, it only takes a couple of minutes to run. You can then compare any stock to any other stock and go and take a look. And it is the value of it is that it gives you an idea of the wolf packs. There's no way I would have thought that NVIDIA and Walmart are related over the last 6 months, but they are. That's how you can find things like that. if you're looking for wolf packs, things that might move if another stock moves, then will be a great tool. The other tool that is a bit quicker to run is called it's a correlation tool. It's called alpha beta. So rather than comparing every stock against every other stock, which takes a little bit of time, a couple of minutes to run, you can just choose a stock to compare all the stocks in your list against. So I might choose, for instance, NVIDIA. Let's go with that again. And then and this does it on various correlation periods as well. You can choose which ones. And I might choose a list. I'll maybe use my CBOE weeklies list. It's one of my favorite lists to use. So there's 600 stocks in here. I'll run this. This runs fairly quickly. You can see in the bottom left, the progress bar is ticking along quite nicely. And in theory, if I look at the 50 is close to 66, so I can look at the correlations for the 50 period. This should be very similar to what we saw before, right? With NetApp and all of those other stocks. So you could, in fact, instead of saying 50 periods here, you could say 66 just to make it exactly correct, and then run that again. You can put any periods you want in here. So you can see, if things are starting to correlate over however many bars, you can figure that out. All right, so here, yeah, because I ran the other one on the S&P 500 and this one on the CBOE weeklies, there's a slightly different list. Okay, but that's another way. That's another way to do it. With this particular report, it's actually shows you more information in a way, because you get to see different correlation periods together. So you can see is a stock correlated with NVIDIA over the 66 bars? Is it also correlated over 40 bars, 30 bars, 20 bars, etc.? So yeah. So I haven't shown that for a while, but I find that to be quite useful. Okay. Correlations. Now, one thing that is newish within the last year in EdgeRater, and this is the report that if I don't have much time on a day to actually look at the market, I'll just run this report because it tells me so much information. And I always like to run this on the liquid options list. So that, as I said before, it's that list of 250 liquid options. And I'll just run this and talk a little bit about it. So I run this every day. Comes with its own chart on the right-hand side, the own layout. And what it shows me is whether expectations in the market are being broken, exceeded, or not. So it's really based on calculating on our server. We calculate the straddle price of the next expiration straddle. So straddle is when you're buying a call and a put, basically, at the strike price. And it puts that information together and it tells you whether the straddle was busted. So on, say, a Thursday, the expiration would be Friday if it's a weekly expiration. So the server will calculate the at-the-money straddle price on Friday and then calculate on Friday what the change was in that straddle. If the straddle made money, so if you buy a straddle and it makes money, that's kind of extraordinary. You don't really ever expect that to happen. But if you have inside knowledge or something, you might do that. Because most of the time straddles are not busted, and the people who sell the straddles to you make money. So you can always tell here with this busted percent whether expectations are being exceeded. And this report goes back 10 days. The very first columns MNO that I'm looking at right here, they are the current bar. What happened on Friday? So I can see immediately here the Norwegian cruise line holdings, uh, it had a big down move, 7.3%. It wasn't the biggest down move of the day, but it was really not expected by anybody. There was a 293% gain in the straddle. And you just don't see this information anywhere else. So I just love running this every day. It really gives me an insight into what's going on in stocks. And if I want a heads up on things that are happening in stocks, because they don't tend to all just happen at one time, you tend to get a build-up of unusual things happening, and then it comes to a head with one big move potentially. Yeah, so I like to look at how many of the stocks are busted. 36% is sort of an average. It's been quite low recently. You see, you've been in the 25s, 20, 30, 31. But we're getting back into the sort of high 30s, which is, yeah, it's getting a little volatile, a little unexpected now. Yeah, so I'll just go through this list and see if these stocks are appearing day by day. Are they in a particular point in their price chart where it's going to be interesting to create a trade? Could you create a trade that is not going to that has a good risk reward essentially? And so it's very quick to flick through these charts and just see the position of all these. Now on the chart, I always like to have earnings pointed out, because earnings make a huge difference. You'll often see, if you don't have earnings listed on your chart, you'll see big drops or big gains, and you'll be left wondering as to what that is. If you're trying to run technical analysis over those times, it doesn't make a lot of sense, because that was a one-off event that had an impact on the price. So I always like to have earnings marked on the chart. Now on my chart, I also like to have something that's not on this chart. So the default chart for this straddle busters is as shown here. So the first area below the chart is actually the percentage gain. So that should match exactly that bar with whatever appears in this report over here. So I'm looking at, let's go back to Norwegian. Okay, 293% gain in the straddle. It's listed down here as 293. So now you can look back in history and see all the cases where expectations were exceeded in the straddle, and all the red bars are all cases where the straddle lost money. So the sellers of the straddle benefited. And yeah, what I find really interesting though is add to your chart the options data. There is a by some percent. And then I'll move this up to here. And I should change this default always to 0, because what that means is it's going from the very beginning of the chart and it's just accumulating all those percentages. So if there's this percentage gain here of 177%, that gets added to this running total. The problem if you have a moving average of that is that one will drop off the end and one will come on the beginning. You're not really sure what happened. So if you run it right from the very beginning of the chart, then it's only the very last bar that's having an effect on this line. So I very much like to see that. Some of these cases, you'll see that they tend to accumulate in value. So this, straddle is on here. If you just bought the straddle every day, the next at the money straddle in Norwegian cruise lines would have done pretty well. You'd have been in it was doing well for the first few years, but in the last couple of years, you'd have just been buying a lot of straddles for no gain essentially. But it's useful to see, and it's useful to see when that line starts curving up, which is the reason why it has a moving average built in, so that you can see when it crosses the moving average, something interesting is potentially happening with that stock. Compare that to something like SPY. So I'll type in SPY here. Okay, so SPY just tends to be just go down the whole time. So people who buy straddles, people who sell straddles in SPY tend to make money. Buying straddles in SPY seems to not work very well. But at the moment, you've got quite a low volatility in SPY, with all this underlying going on as well. So price of the straddles has been coming down for a long time. You always think that's gonna change. There'll be a blip. If you want to see what the actual implied volatility of the options is, there is also in the options data, we can see the multiple midterm implied volatilities. I'll just run that up to the top there. So this is the actual properly calculated implied volatility of the 30 period, the 45 period, 60 period, and 90 period expirations. And you can see we're pretty much at lows, coming off a little bit from these lows. But yeah, there's not a lot of fear in the market at the moment, which potentially is a reason to be fearful. Okay, so this is a great list to see. Is just like a way to orient yourself in the market, what's happening in the market. And I'll run through a couple of other things I like to do that I haven't talked about in a while. There's been a bit of a change to the this is a thing we'll talk about now, is well, no, what I'll talk about now, this came up last weekend. It's seasonal analysis. And it sort of surprised me that the people weren't using EdgeRater for the seasonal analysis, because it's extremely quick and easy and powerful in EdgeRater, and so many other tools have gone out of they're not available anymore. It's really hard to find good seasonal analysis. So seasonality now, just run seasonality now if you're ever interested in seasonality. And I'll show you what it does. I'll run it on a larger list of stocks, maybe the CBOE weekly is. And what it's doing is basically going back through history for however much data you have in your symbol list. I tend to always have 10 years of data. You could have more or less, depending what you want. And because I've got 10 years of data, my numbers here should add up to 10. How many, if I look back in time, over the last 10 years, how many of those years were up years for the next 2 weeks? Essentially, from June 14th was the last trading day for 2 weeks. How many of those weeks were up weeks? How many of those years was it an up period for the next 2 weeks? So it's good then to sort that by number of up years. So 9 is very good. Obviously 10 and 0 would be excellent, but 9 is very good. So Best Buy, here's a stock that has good upcoming seasonality for the next 2 weeks. Best Buy. Yeah, maybe that's surprising, maybe not. We also have some other ones. Always also look at the average, because it could just be an up year and maybe a 1% gain over 2 weeks. That's really doesn't do you very well. Then there's a 6% gain in VRTX. That seems to have come up a lot. It came up last weekend, I think, when we were looking at seasonality, VRTX. 8 and 2 with 6% gain. So, that is, it's kind of going up. So you wonder, if you're into seasonality and you want to know what has been seasonal in the last X number of years, and you choose the X, then this is just an amazing template to run. It's very quick, and it will generate for you some ideas. One thing that you can couple with this is I put a template together for Dave McMullen, and I'm not sure if he's on with us today. I know he signed up, but it is seasonality combined with his moving average cross, which his cross that he likes is the 820. So I put that together. You'll find that in the hot topics of EdgeRater. There's a category over here called Hot Topics. You'll find the DM. DM stands for Dave McMullen. It's crossed with upcoming probability. So I'll run this on that same list. And what you'll see here is that the seasonality has been added to the end of this template, but it's incorporated the moving average cross, right? So if something has upcoming seasonality and it's also made the moving average cross, you know that it started a move. And so this is brilliant. Yeah, thank you, Dave, for coming up with this idea. Uh, yeah, so the way this works then is you can see if there was a moving average cross today. If it crossed today, there will be a yes. And it's sorted really by everything where the 8 and the 20 period moving average is crossed today. And the chart has the 8 and the 20. It also has the 50 and the 200. But yeah, the 8 and 20 is the red and the green. So that did cross today. So it's sorted by that. But the key is to look and see what the seasonality is. Is there good seasonality here? Not really. 7 and 3, 5%. Yes, it's favorable, but it's not an 8 and a 2 or a 9 and a 1. But still interesting, 7 and 3. And that was CYTK. Was that CYTK? Yeah, I've clicked on CYTK now. So yeah, this has 7-3 seasonality. The 8-20 has crossed. Potential that there are lows here that if you are trying to frame a trade, that you could use this as something to sort of frame it off if you're looking for risk reward, which is the all important thing about trading. And if you attend Phil and Griff's course on implementing the swing systems, you'll hear all about risk and reward as well. Yeah, so here, let's take a look through this list. So UCO, this is your oil, ultra oil. Essentially, the 820 has crossed. There's a 5% average with 6 up years and 4 down years. So that's something to put on your list. Doesn't look great at the moment, but often things that don't look great can be the things that turn out to be great in the end. Just nobody is looking at it at the moment. So 2 and 2, that's nothing, right? It's been 4 years of history in this stock, CLSK. 2 of those were up years, 2 were down years, but the average was 4% higher. So there's no great average. This one here is probably a better one, which is CLX. Okay, it's got 8 and 2 with 3% over the next 2 weeks. So it has some kind of seasonality in here. Again, it's made a low, something maybe to frame a trade-off in here. So yeah, this is a great template. As well as showing you the cross itself, it will also show you how long ago the moving average cross was. So if it crossed up today, or how many bars prior it crossed. So if you didn't look at it exactly on the day that it crossed, you can actually sort this by the bar since, essentially, and go back and see things that have crossed recently and how if they're in a situation that you want to trade. So yeah, so that's the seasonality. I really wanted to get that get that covered. And there are so many other templates that I wanted to cover, and we're coming up on the 5 minutes to. And I want to take some questions. I also want to know if you found this interesting. Would you like me to do more of these? Would you attend? Any questions? I'll take any questions. You can always send me an email, chrisw@edgerater.com is my email address. I do answer questions within 24 hours. We have this time lag between the UK, where I am right now, and the US. So normally I get questions. I'll see them in the morning when I wake up, and I'll probably answer them before you wake up. So that tends to be the way that works. If you have any questions now, I would love to hear them. If you would like to have the mic, I could probably open that up for you as well. I would say so. I have an offer as well for you. Like, if you don't have if you haven't resubscribed to your EdgeRater premium data, uh, then if you do that this weekend, and you can do that from the EdgeRater site, then I will add an extra couple months to your subscription. The way to do that is you go to the homepage of EdgeRater, and go to Pages, go to Premium Data, and hit resubscribe. If you do that this weekend, I'll add an extra couple months for you. It's still the same price that it was originally, so $297 for 12 months of premium data. And what does premium data get you? It gets you it's all of the things that we have to do to provide the service. So we're providing the data for the end of day prices. We're providing the options data. We're paying for all that. We're hosting that on the website. So it gets you that. It gets you any new updates to templates. It gets you I said the options, the options data. Yeah, options data, template updates, that sort of thing. Okay, fantastic. Uh, if what is Saturday a good day to do webinars? So let's get a little I don't know if I can't do a poll here, but if you just let me know if there's a preferred day of the week. So I tend to like doing Saturday mornings for US. I know other people like to do them midweek, but probably people have jobs, right? Not everybody is looking at the markets all the day. So Saturday, so if it's Saturday, you're putting a yes. Okay, good. And this time is good. Okay, Stuart C had a good question about can you add an earnings chart to seasonality? Um, and I do want to talk, I can't talk about that, don't have time to talk about it now, but last weekend when I did my presentation, I did talk about the new earnings data in EdgeRater. And so that essentially has seasonality built in. I'll talk briefly about it. So earnings, if you look at the earnings moves, close before earnings to close after earnings, I'll just run this on my CBOE weeklies. So I can see all the earnings coming up, and I can see all of the prior 20 earnings. This is not talking about the earnings expectations or whether they beat earnings. It's talking about the move that happened after earnings was released. And so you can, if you're looking to do some sort of seasonality type thing here, you can sort this by, uh, you know, either you could say, I just want to see only things where earnings are coming up, right? So we can see that Micron is coming up on 626. Can sort that by there. So the first earnings coming up from that list is Kroger on 620. I can see that the last earnings, it had a 10% gain. 1% the earnings before, 3% the earnings before that. But E4 is your same time last year, essentially, when it made a negative 3%. And then E8, negative 2%. That was that same time the year before. E12 made plus 4%. So that's one way of seeing seasonality with earnings. Okay, so it seems like Saturday is good. It suits me. Yeah, so the plan will be to do as going forward through to the rest of the year, to do more. I hope to get Ken Long, to talk about the two templates types that we have now, the critical states and the swing systems template. And he has some great presentations on those signals and how in the 20 years that they've proven to be just amazing signals. So hopefully in the next week or two, we can get Ken on to talk about that. Also hoping to get, I did have a chat with Henry K, Kichmarchik, who's written a few templates for EdgeRater, and he is keen to, I would say keen. He has said that he will come on and present a little about how he trades. He's obviously quite experienced. He's written a lot of scripts for EdgeRater and three templates that appear in the user category. So hope to get him on too. But yeah, I think it would be good to continue doing this. We can go through, look at the market, we can look at stocks and different types of template and different ways of finding stocks. I think it'll be fun. So that is it. Thank you all for attending, spending an hour on your Saturday. I appreciate it. And the recording will be made available. And we'll see you next time.